Let's get some sense of what's going on with the equity market at the moment and some stocks to look at. Shawn Hickman joining us from Market Matters. Shawn, good to see you.
Nice to be here.
Let's look at the broader market to begin with. Your observations there. Of course, we're ever mindful of what's going on in the States with the midterms, the inflation read, the recent payroll numbers. Where do you see the Australian market heading at the moment?
No change for the last 4 to 6 weeks. We're bullish. There's a huge number of balls in the air. We all know that, whether you look at the midterms, whether you look at this COVID zero policy out of China, which is another coin toss. The bottom line is the market, in our opinion, it's just exhausted on the downside. We've got record short positions or underweight positions by fund managers. US fund managers have got the highest level in cash for over 20 years. And we think because of that, we're going to see the market continue rally, continue to go higher into early 2023. And it's already quite a long way off the lows of October.
You mentioned China. There is considerable confusion whether it's going to drop its COVID zero policy or not. You would assume it will one day. It is a question of when, though. And of course, that is affecting commodities in particular, given and you know how that's playing out locally with stocks. What are you seeing there, particularly when you factor in the likes of the iron ore miners, for instance?
Yeah, it's a fascinating one. My wife is from China. I speak to her family quite often. They've got no idea what's happening there, so it's hard to guess from here. It's purely a guess. But I think the point is, we saw yesterday the Chinese economy is starting to struggle, or it's continuing to struggle, I should say. And I think it's more a case of when, not if, they do look for a different way to go, change of direction with their COVID zero policy. And as we know, at China, they'll be looking for a way to maintain faith or face when they do that. So I think, we've got to look at what happened on Friday in the US especially. The US dollar came off the ball again overnight. And the path of least resistance for these miners is up. BHP kicked up 5% yesterday. It's been a long time since we saw moves like that. If it comes out with a bad set of numbers, etc., it might drop 3 or 4%. So the path of least resistance is up. I think Samphire was up 6.6% yesterday. Freeport was up almost 11% on Friday night. So again, I think the path of least resistance is up. Exactly when China is going to act, who knows?
All right, yeah, I've just seen the share price there of BHP, which is effectively back to where it was at the beginning of the year. Sandfire, well, of course, I mean, you're talking copper play there for Sandfire and also BHP, but that is pretty much reliant on the price of copper at the moment, isn't it?
Well, let's go back to BHP. BHP hasn't really changed its price in 18 months, as you rightly pointed out. It's been up and down in quite a big band, but during that time, it's paying a phenomenal fully franked dividend. We shouldn't ignore that. You know, if you're holding BHP and it's unchanged over the last 18 months, you've done really, really well. Especially in this market, you've done fabulously well. So yes, of course, BHP, especially if it goes ahead and takes on Oz Minerals, copper is a huge part of its smorgasbord, and hopefully it will because we hold some Oz Minerals. So yes, we think copper will go higher from here, and any downside in it, I think, can be bought. So the same thing with Samphire. Samphire's had an awful 12 to 18 months. And we can see that stock trading right the way back towards $5.
All right, the energy complex, of course, we know how significant the price appreciation has been in that particular sector. Woodside, the standout here, it's up some 70% in fact over the course of the past 12 months. Are you seeing more upside?
We are, and last time you asked me about Woodside, I flippantly said just stay long. We're long and stay long, and I'm still doing that. I don't see any reason why you'd fight the trend. One of the biggest trends of the whole year has been the dogs have kept on falling and the strength has kept on rallying. And that's still going until further notice. So at the moment, for example, the FANG stocks make new lows last night. They're down 49% for the year. Stocks like Woodside, new highs for the year yesterday, as you rightly point out. Oil looks good. Oil will look good if China vaguely releases that COVID zero policy. Here we are talking about it again.
Yeah.
But it looks good, and I don't see any reason why you'd fight it. You know, I'd stay with Woodside, and we are. We're still long, we're comfortably long.
So as far as energy, you want to stay with the major players? Anywhere else you're looking in the energy sector at the moment?
We're long Exxon in the US, we're long Woodside here. Keep it simple, stupid, stay with the quality stocks that aren't making mistakes. You won't necessarily get the best return, but if you get a good solid return in today's market, I'm happy to take it.